gold prices dropped below $4,500 per ounce as military tensions between Iran and the U.S. escalated. The precious metal fell nearly 1% to settle at $4,444.86 per ounce during midweek trading. The decline came after Iranian forces reportedly launched a major strike targeting U.S. installations in Kuwait, Bahrain, and other locations. The attacks, including missile and drone strikes, reportedly targeted the U.S. Fifth Fleet Command Center in Bahrain and bases in Kuwait. These developments reduced optimism about a diplomatic resolution between Washington and Tehran, pushing gold prices lower as market participants await clarity on geopolitical and economic developments. The gold market is closely linked to global risk sentiment. In times of heightened geopolitical tension, gold typically rises as a safe haven asset. However, in this case, the opposite occurred. The market's reaction suggests that the perceived risk of a broader conflict was not enough to offset other macroeconomic factors. Specifically, climbing crude oil prices are stoking inflationary concerns, which in turn fuel speculation about potential U.S. interest rate increases. A stronger dollar also made gold more expensive for international buyers, adding downward pressure on the price. Gold futures contracts for August 2026 also declined by 1%, reaching $4,475.62 per ounce during early trading hours. This indicates that the bearish sentiment is not limited to the spot market, but is also reflected in longer-term contracts. Market participants are exercising caution ahead. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Of Friday's U.S. employment report, which could provide further insight into the Federal Reserve's monetary policy direction. If the data shows a stronger than expected labor market, the dollar could strengthen further, adding more pressure on gold prices. The U.S. military reported that some of the Iranian attacks were either successfully countered or failed to hit their intended targets. However, Iranian officials claimed that the Islamic Revolutionary Guard Corps successfully struck the U.S. Fifth Fleet Command Center in Bahrain. These conflicting reports add uncertainty to the situation and could influence market sentiment in the coming days. If hostilities escalate, gold may see renewed buying interest as investors seek protection from geopolitical risk. Conversely, if tensions de-escalate or the U.S. responds with a strong military or economic counteraction, gold could face renewed selling pressure. Gold's price movement is also being influenced by broader macroeconomic expectations. The U.S. employment report due on Friday will be closely watched for signs of inflationary pressures and labor market strength. A strong report could support a hawkish Federal Reserve stance, potentially leading to higher interest rates. Higher rates typically reduce gold's appeal as it does not pay interest. Conversely, a weaker-than-expected report could signal a more dovish Fed, which may support gold prices. Investors are currently balancing these factors, leading to a cautious and volatile market environment. The gold price decline follows a broader trend of market uncertainty. The yellow metal has been under pressure for several weeks, with investors shifting to higher-yielding assets amid expectations of tighter monetary policy. However, the recent geopolitical developments have introduced a new layer of uncertainty. If the situation in the Middle East deteriorates further, gold could regain its safe haven appeal. Conversely, if a diplomatic resolution is reached or the U.S. responds with a strong military or economic action, gold may continue to face downward pressure. The next key signal to watch is Friday's U.S. employment report. This report will provide important data on inflation and labor market strength, which will directly influence the Federal Reserve's policy decisions. A strong report could lead to a stronger dollar. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And higher interest rates, both of which are bearish for gold. A weaker report could support a more dovish Fed stance, potentially supporting gold prices. Investors should also monitor the evolving situation in the Middle East for any new developments that could impact market sentiment. In the meantime, gold traders are likely to remain cautious, with many waiting for clearer signals from both the geopolitical and economic fronts. The market is currently at a crossroads, with multiple factors influencing price direction. The gold price movement will likely remain volatile until more clarity emerges on both the US-Iran situation and the Federal Reserve's monetary policy path. Investors should closely monitor these developments for potential trading opportunities.